Hello, everyone. It's Tuesday, the 12th of June, 2018. It's 8 a.m. Chicago time. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Hopefully, you had a restful evening and are ready for this market. This morning, allocations are just all over the place. Gold's a drag, down $4.3 at 0.32%, followed by the Japanese yen and the bonds. It looks like we're almost allocating to risk. The small caps are dragging down 0.06%. The leader this morning is the mini NASDAQ, up 9.5%. But I got to tell you, it's completely lackluster. I mean, the S&P is up 3 points, 0.11%. The expectation on the S&P is that it would explore through that 83 quarter double top from Thursday and Friday, and it just pushed through and came back up. What's likely to disrupt our auction today? Well, the two-day FOMC meeting starts today. That's not likely to impact us right away. We did have some releases overnight. The German zoo survey came in slightly worse. And we had CPI come in a little bit earlier. We're left with the monthly budget statement at 2 p.m. Eastern, 1 Central, and no speakers. So it's a market that's likely to move under its own power. Of course, we still have the influence of news and what's going on geopolitically with the denuclearization pledge with North Korea and all the political maneuvering that's going on there. So that's where we are. Let's hop right into a review of what we expected. By the way, I will not be here Friday. Friday I'll be traveling. Just there will not be a Trader Bite. Just it's a good day to kind of do your own thing and so on, which you should be doing anyway. Here's the primary scenario. The primary scenario was for a potential dip into the 2777 area, but ultimately we wanted to get to, we're expected to get to 2795-ish for a failure up there. Why 2795-ish? It's actually 2793.5, I believe. That is the high volume node of the composite, the micro composite that was built on the 9th till the 16th of March. That's the area we're trading in now. This pretty much is what took place, except we didn't have this dip. A dip would have been nice. Here's the alternative. The alternative was for it to just grind up. And in that case, I was looking for a higher high at 98.25. Approximately 14 points in either case. And so that's how it that's what was expected, but that's not how it played out. And then the third scenario is a push to 91 and then failure back into the prior range for a test of the key area at 74.75. Here's what really happened. Not very much. Just a grind sideways. And then we did get to that 95 area. 94.25. The key figure, the key level or zone in this area was 93.5. And then sellers stepped in and took it right back. We have a double distribution profile from yesterday. Just very sleepy trade. Short time frame traders in control. Intermediate time frame traders move in. And then short time frame traders in control. Intermediate time frame traders kick in. And then the close, short time frame traders in control. So that's what we played yesterday. And so we ended up with a double distribution that actually moved back. This white line right here, this white line right there, right there. That white line is actually following VPOC and its movement. Okay, VPOC movement doesn't really matter until we get through the IB. By then we have a good portion of the day's volume in, and it has some substance. And you can see that we shifted the point of control to the upper distribution, which would set us up for continued push to 2800 century figure with pretty good resistance at 2798.75. But instead, we shifted the point of control back down to the lower distribution, finished in the lower distribution. So my recap yesterday in the convergent head channel was that as long as we stay below this 89.25 where we are right now, well, first I said I expect us to retest this 83.25 and potentially poke in, and we did, but we only did it by 7 ticks or something. I mean, not 7 ticks, 3 ticks or something. So from yesterday's double top, or the last week's double top. So not much of a poke there. And I said that as long as we stay below this low volume node at 89.25, we're likely to start exploring lower, with 74 being the key figure below, the key structure that we're likely to test, this low volume node here. That's what I was looking for. But the market being what it is, it has built an overnight point of control right here and is trading right in that point of control just to make things a little more tricky. So overall, yesterday, a very clean and clear distribution, double distribution, showing us that there was really not much going on, that there was a ton of chop. Yesterday, no trades in the ES, no trades whatsoever. Just, it's rare that there would be no trades, but I can't invent a trade just to trade, right? So that's lack of discipline, and then I'm veering from my plan. No trades yesterday at all, and so here we are on the overnight. Here's what we've done. The overnight volume, pretty healthy, but remember, it's expiration week, right? A lot of positions being rolled from June to September. Overall, just snaking around the closing price. Overnight inventory is pretty much balanced, and we're right on top of the point of control, which is right here. The range overnight has been okay. 9.75 points. 9.75 points, which is pretty good volume. So pretty good discovery in the overnight session. Looks like consensus right in here. And we are on the edge of that. We are on the edge of the overnight value with the point of control right on the edge. So overall, not much telling us, not much cluing us in as we come in today. So where do we go from here? All right, so let's see. Okay. Here's where we are. So, oh, one more thing. Just to keep an eye on what's going on in the bigger picture. Here's the bigger picture. Clear channel up, right? Market's in a bull run right now. It moved away from a lot of value right here. A ton of value. At 27, what was it? 27.26, something like that. It's actually up here, 27.23. Point of control, we've moved away. We are trading in this zone here, the March 9th to the 16th. And this was yesterday's high right here, this high volume node, basically 93.5. And so we could see that in the bigger picture, the buyers are in control, clearly. Yesterday we finished with a higher high, higher low, higher point of control, higher value. the trend up is very well intact. The sell-off yesterday had some pretty good weight on it, pretty good delta, pretty good volume, pretty good movement, which is the reason why I created this idea why I had the idea that if we stay below this 89.25, then we're likely to explore the next low volume node down here, which would be sweet if we can get that kind of trade. But as we stand here, we're opening at the low volume node in a double distribution, and so that changes a lot of what I had planned out coming in. We're likely to see an open auction that is wide. I expect wide rotations on this open auction. I expect intermediate to short time frame traders to be in control. I expect it to go sideways for quite some time, and then it's really any person's call on whether we take the upper distribution or we drop to the lower distribution. If we drop to the lower distribution, then my plan is let it drop. Let's hopefully with an impulse, let it pull back to the OS low or even the IB low. And I'm looking for a short continuation trade to the overnight low of 27.8225, consolidate, and then continue lower with the extended target of 27.7475 as scenario 1. Okay? So that's scenario 1. Scenario 2 is the other side. Scenario 2 is we get up into the upper high volume node, which is also the overnight high. We take out the overnight high on that stat, consolidate for a bit, and then re-challenge this 93.50, consolidate, and an attempt to push up. There's pretty good resistance at 98.75 on a first test, and then finish somewhere higher high, higher low again to continue the trend. Those are the two key scenarios. Both scenarios are looking for open shop on a wider, on wide rotations, given that it's in a low volume node. Low volume nodes are discord, represent discord or disagreement on price. Volume did not go off in that area, and so it was seen as an unfair area. So when we open there, we're likely to spur trading in both directions. Okay, we'll keep it short and sweet today. That's all I have for you. It is, again, expiration week, summer trading. It is a good test of your patience, this kind of stuff. So this is it. We're moving into the September contract, which brings us into the summer trade, and it is what it is. So just pay attention. It's a good time to focus on other things. Focus on your ability to hone in on errors, which is really what your dedication should be to. Figure out what errors you're making between, and an error is something that where you had a plan, and then when you executed something completely different. If you are not tackling your nemesis, your enemy, which is your errors, your execution errors, then you're losing time. Okay, so make sure that that's a big part of your effort. Good luck.